Dr. Babasaheb Ambedkar Open University.
Hello my dear friends and students, welcome to Dr. Babasaheb Ambedkar Open University in Chaitanya studio of Dr. Babasaheb Ambedkar University. Today we discuss the very renowned topic called financial statement, which is combined in your subject called financial statement analysis as well as in a financial accounting also. The block 1 unit 2 financial statements. My dear friends, as we learned in a last session or in a last lecture, we discussed the meaning of financial statement, characteristics, purpose, objectives, the financial statements like in manufacturing account, trading account, P&L account, balance sheet, etc. For that, my dear friends, in a manufacturing account, the very important points, or we can say the important elements to preparing a manufacturing account is important. So first basic point or basic element, that the stock is important. The distinguished features of the manufacturing concern in the type of stock held. A trading concern hold only the stock of finished goods. A manufacturing concern hold the stock of material, semi-finished goods, or we can say the work in progress, and as well as, my dear friends, the finished goods also. So I can say that stock are majorly divided into the three types. That is raw material, that is your opening stock or the basic stock of raw material, then work in progress or semi-finished goods, and third is finished goods, that is finished stock. So these stocks are recorded in your financial statement or in accounting system. For that, my dear friends, second important point is direct material consumed. It is customary to show in the manufacturing account the value of raw material consumed for manufacturing goods during the concerned period. And for that, the mathematical expectations are there. And to evaluate or compute that, then you have to follow these steps. Say for example, opening stock of raw material. In that you have to add purchase of raw material and the carriage or freight inward or purchase expenses over there. From there you have to deduct rejected or return the goods or that raw material that is ultimately treated as a purchase return also, and less closing stock of raw material. Then you evaluate or computed your direct material consumed. So formula is that, my dear friends, direct material plus purchase of raw material, third, that is the addition of carriage or freight inward or purchase expenses, less rejected or returnable or returned material, and last less the closing stock of raw material. Then you define your consumed stock. So opening stock plus purchase plus all purchase expense minus purchase return minus closing stock is equal to direct material consumed. Next important point is work in progress. The representation material put into the process which is not completely converted into the finished goods, which is treated as work in progress or semi-finished goods. Opening and closing work in progress are shown in a manufacturing account on debit side and credit side respectively. That is opening on debit side and closing on credit side. However, their figure, that is difference, appears on the debit side either as an addition or deduction. So this is what called as a work in progress. The next point is, my dear friends, sale of scrap. In manufacturing operation, there may be a certain scrap which may or may not have a sale value, or in order to find out the correct cost of manufacturing the goods, it is necessary to credit manufacturing account by amount of scrap, and that's why the sale of scrap is important points or important elements of manufacturing account. Next is, my dear friends, factory expenses. In factory expenses, the expenses including or includes the possessing or manufacturing goods, that is converting the raw material into the finished goods. And the expenses are included in this, that power and fuel, rent and rates and taxes, the insurance, repair and depreciation calculated on that asset of manufacture, factory stores and spares, and the factory supervision, that is your supervision expense. So my dear friends, these are included in factory expenses. The next point is balance sheet. As we concerning with that preparation of financial statement, the flow of preparation financial statement, the first we defined that trading account, profit and loss statement or profit and loss account, profit and loss appropriation account, and then fourth and important point, that is balance sheet. When these four are merged, at that point of time, my dear friends, your financial statement prepared as per your requirement. So you have to concern with this four. So balance sheet is also an important point. Balance sheet defined as, it is not possible to define the whole balance sheet except the vague terms. The definition of balance sheet given by an American institute certified public accountant, that is AICPA, is as follows, that balance sheet is a list of balances in the asset, liability or net worth account. In a simple word, we can say that the list of balance sheet, that means the all balances of asset, liability or the net worth account, that is your public profit and loss statement or profit and loss account. And this definition, my dear friends, is accurate but not meaningful. Thus, the Accounting Standard Board of India has defined the balance sheet as the statement of the financial position of enterprise as at given date, which exhibit its asset, liability, capital, reserves and other account balances at their respective book values. This definition defined by the Accounting Standard Board, India. Very precise and meaningful definition defined by the Accounting Standard Board, India. That you only deal with your asset balances of asset and liability, but you define your financial position of that particular enterprise at that date, which exhibit what? Its asset, liability, capital, revenue, reserves, all other balances which are concerned with that particular enterprise in respective book value as you recorded that facts and figure in a past or at that date. So this is what, my dear friend, balance sheet concern. Next is, the balance sheet is given as a various title. So sir, what are that titles which can be the prescribed? So it can be the prescribed as follows: that general balance sheet, statement of financial position, statement of financial condition, statement of asset and liability, statement of resources and liabilities, statement of availability of resources and their applications, statement of asset, liability and capital, statement of worth, statement of net worth, financial statement, etc. My dear friend, these are the various titles which can be the use for the balance sheet. In different area, in different era, they define it in a different way, and they title in a different way. Though. So these are the titles of balance sheet. Next is, my dear friend, that is function of balance sheets. There are mainly three important functions of balance sheet. So the three important functions of performed by the balance sheets are there. That is, the first is, it gives the summary of firm's assets and liability. Summary is which include the balances. That only define that what are the assets are there and what are the liabilities are there. So ultimately you summarize what your asset and liability in a single meaning. Then it is measure the firm's liquidity. That the firm's liquidity is also important for the future aspect, for making the decision making also, to make an particular decision on a particular product for future also. So it is measure the firm's liquidity. Then, my dear friends, it measures of the firm's solvency, whether that firm consisting with that particular business in future or not. The solvencies are also there. So these are the three main functions, my dear friends, which reflect the performance of your balance sheet. Then you have very basic questions, sir. If we are considering this three performance and this type of balance sheet definition, etc. So, sir, how it can be the presented? In which format we present that balance sheet? So, my dear friends, if we consider the format of balance sheet, then the balance sheet may be presented in a various form. So we can say that the vertical format also, the conventional format also, which are treated as a horizontal format. So conventional format is treated as a horizontal format. So both are same. So then vertical format. In the world, these two formats are popular for preparing a or presented a balance sheet. While you deal with that particular presented the balance sheet, then in horizontal way there are two types. That is a block. Like in the left side you define your liabilities and right side you define your assets over there. There are different assets and different liability, as you know about it. Next point is the analysis of financial statement and ratio analysis. The analysis, the word analysis itself defined that you analyze something which you done in a past, and you do that in present, and for that you evaluate your performance and to make a decision for the future. On that, my dear friends, the financial statement analysis is defined as the process of what? Identifying financial strength and weaknesses of the firm by properly establishing or establish relationship between the items of balance sheet and profit and loss account. There are various methods or techniques that are used to analyze financial statement. If we talking about that method or technique, So firstly, we compare that comparative statement technique is also there, or comparative statement method is also there. Second is schedule of change in working capital. And third is common size statement or common size percentage. Fourth is a fund analysis, that is fund flow also there. Then trend analysis, then ratios analysis or ratio analysis. So my dear friends, financial statements are basically prepared to meet external reporting obligations and also for decision making purpose. And for that, my dear friends, it play a dominant role in setting the framework of managerial decision to make an appropriate decision for the management. And for that, my dear friends, financial statement analysis and one of the best analysis over there, and you can use any technique for that particular analysis. So ratio analysis are also the part of that method or technique of that analyzing the financial statement. Next is, my dear friends, limitations of financial statement. The first limitation, that the information being of the historical nature does not reflect the future. Because basically it is based on what, my dear friends? Historical method. It is the outcome of accounting concept, conventions combined with the personal judgment also. See, that is my personal judgment is different and your personal judgment is different. So in that matter, ultimately you have to suffer, or the company has to be suffer in that particular manner. So financial statement analysis, or in a financial statement, the concept, conventions and personal judgments are directly affected to your financial statement, and thus, my dear friend, it is the biggest disadvantage of the financial statement, or we can say the limitation of financial statement. That, my dear friends, the statement portray the position of monetary terms. The profit and loss position excluded from their purview things which cannot be expressed or recorded in terms of money. And that's why, my dear friends, we use that accrual basis concept. So which is also important for that. And according to that characterized, it take as a part of the limitation of financial statements. So these are the, my dear friends, limitation of that financial statement. The next limitation is that as information provided in financial statements is not an end in itself, as no meaningful conclusion can be drawn from this statement alone. However, the information provided in financial statement is of immense use in a making decision through the analysis and interpretation of financial statement. To overcome from the limitation, it becomes necessary to analyze the financial statement. And for that, my dear friends, two analytical tools generally available for the analyst for this purpose. And for that, my dear friends, first is comparative financial statement and operating statement is important. Second is common size statement, where you based are the common. that is base is your previous year or somewhere else. Then trend analysis and trend ratio and the trend analysis also. Then average analysis, then change in working capital also, then fund flow and cash flow analysis are also there, then ratio analysis are also there. So ultimately what these are an important analysis for the purpose of financial statement analysis point of view. So my dear friends, here what we learn that when the characterized are there, at that point of time there are some purpose, there are some objectives, and also my dear friend there are some limitations also. So my dear friends, this is what all about the financial statement. This is an important topic for your subject also are there, but for your basic understanding also, for your general knowledge also. It is not concerning that the only the person who do the business can use that financial statement. It is also used for their personal account also, for your personal purpose also. So my dear friends, here what we do or what we learn that the financial statement are important in a nature for a business also, for a company also, for a government utility also, and for other external user also. And in that my dear friends, we can go to the next topic, that users of financial statement. So basically if we divide that users, so there are majorly two users are there. First is internal user and second is external user. The internal users are connected with what? That your internal basis, such as your employee, such as your management system also are there. So these are the what important users of your financial statement. Then we come up with the external users, then government also that, different government departments also there, teachers also there, students also there, competitor also there, the banker also there, the borrowers and lenders are also there, that means creditor and debtors are also there. So these all the financial institutions are also there. So these are the users of that financial statement. When users are there, characterized of financial statements are there, then definitely we are come up with the limitations also. So these all are the limitations, and for that my dear friend, analysis of financial statement also important, and for that the different approaches are there and different techniques are there and different methods are there for evaluating that financial statement. Now my dear friends, the financial statement is important as we learn all this requirement. So in company, what are the requirement to prepare the financial statement? Whether the listed or unlisted. At that point of time, you have to define the different legislations for that. The first legislation, that Companies Act 2013. In that my dear friends, according to schedule 3, you have to prepare what? Financial statement, that is balance sheet and profit and loss statement in a vertical format. But when you are recording that profit and loss and balance sheet item, you have to define what are the accounting standards over there, what are the Indian accounting standards over there, What are the international finance reporting standards over there? What are the conventions are important for that? What are the major important methods are there? So these all legal requirements comprise with what? Your financial statement. For that, my dear friends, financial statement requires not only that accounting method, but it also complied with the legal requirement and economical position also. So what we learn in that, an analysis of financial statement is the process of what? Critically examine in detail accounting information. For what, my dear friends? Given in financial statement. And for the purposes of that analysis, individual items are studied over there. Their interpretation or interrelationship with other related figures and facts are there. So we learn what? This all types of measurement. That analysis of statement is important, that is cash flow statement, trend analysis, common size statement, comparative financial analysis, ratio analysis, fund flow statement, all are there. So what we learn in this block or in this unit, that what is financial account, financial statement analysis, the meaning and development of financial statement and financial accounting, limitations of financial statement, the elements of financial statements. So this is what we learn in that. After learning this particular manner or particular unit, you have to evaluate yourself also. By what, sir? By evaluating this long question, my dear friends. The first question is that write a note on balance sheet. Then discuss the limitations of financial statement. Then in a short question, my dear friends, define any two techniques of analysis of financial statement. Then define an important element of manufacturing account, such as the cost method, WIP also there, direct material consumed, finished goods, sale of scrap, production and factory expense are there. So these all are the elements. Then evaluate yourself with the this multiple choice question. First is, which account, that is dash account, is prepared to find out the total cost of goods manufactured in a period. The word manufacture itself defines that manufacture account can only do that. So answer is manufacturing account. The second question is that the conventional form or the customary form of balance sheet is also called as which form, my dear friends? Horizontal form. So these two multiple choice questions are very important for you. And if you want to refer extra with different reference book, then these are the reference book used for your external reference purpose also there. So today we conclude with this only. Hope you learn well and hope you enjoy this session. Have a great day. Thank you very much.